Welcome everybody, Doug McKay, anti-wallstreetguy.com on Friday the 6th of May. We closed today on the S&P cash at 1340. Our overall posture right now is flat, or I should say neutral to down. Neutral to down on equities. We put this still chart up last week. This is an inverted head and shoulders here. Head, left shoulder, right shoulder. This 1340 level is the neckline. Yesterday we closed below the neckline. Today, intraday, we were up big above 1350 on the cash, but we closed right at the neckline at 1340. We'll see how next week plays out. But there's nothing that says that we have to go to 1400, 1423 here if this breaks down. If you're looking at this more long term, if we were to break the low on 418 of 1294, that would be of big concern for me, because that ideally would mean we'd run it down to basically these lows here, the Japan lows of about 1260. So for right now, to go on record, we're neutral to down, which is our posture right now on the S&P. Let's take a look and see how this faded towards the end of the day. We'll pull up an hourly chart here. You can see that towards the end of the day, we started to head down on the S&P, give back those profits. Again, we closed right at 1340, so we'll see how next week shapes up. All right. So right now, that is equities. If we take a look at bonds, bonds are working right now. This is a chart. Let's pull it up, a daily chart of the IEF. We see interest rates, the 10-year rates went down throughout the week. This chart looks good. We are playing this right now in the managed accounts. We have been for the past 3 weeks in tip. Once we got above this symmetrical triangle here, we broke out above that. We are in tip. So we'd have our stop probably right around 109 at this point. We're going to go right below the breakout area here. All right, so bonds look good. Equities, for me, neutral to down at this time. That could change next week. I'll let you know on the blog. When we take a look at oil, obviously that's down big time. Here's a look at the OIH. We're kind of looking at a head and shoulders here. This would be a left shoulder. This would kind of be a head. It could be a sloping head and shoulders where we could draw a line across here. We never got above that 162, 162.50 level. Once we got above 160, you would definitely want to have your stop in around 155. We closed at 147.58. Let's take a look at this on a weekly chart. For me, I would be staying out of this at this time. If you wanted to play a bounce, I would probably play it if we got all the way down to 133 on a weekly chart. 133, where there's major support. You could make a case where there's support here where we stopped today, which is probably the reason that we stopped. You could also make a case that we could go to 140. But for me, right now on crude, I would stay out of it. We could just be making lower highs and lower lows. Let's take a look at USO. This is a position that we put up on a still chart this week on the blog. I did some selling in this on 5.4. Yesterday it dropped 9%. Today it was even lower. Again, we broke the trend line there. I just didn't really have a good feel when I was looking at the futures on crude. Therefore, that in this chart was part of the reason we exited the USO. Let's take a look now. NASDAQ is doing pretty well. NASDAQ's still holding that 2,800 level. We're still above the breakout area of 2,800. It's almost a given that at some point, any position, we talk about this all the time, where you're going to come back down and test the previous breakout level, which in this case is 2,800. We did that last week. We actually did that yesterday. But when you do that too many times, that's testing support. You're going to go through it based on probabilities. You're going to break through it. So I think if we touch 2,800 a couple more times, the NAS is going lower. Based on probabilities, because we're only going to touch that support area so many times. We're still trading above the 50-day moving average. Let's take a look at gold. We are doing something very similar in gold to what we're doing with our position in equities in the managed accounts, and that is we are hedging them basically 1-for-1 until we get more definitive chart direction here. So having said that, even though gold is holding the 50-day moving average, which is the blue line here, it did yesterday break this trend line. That's one of the reasons we got defensive. Today you can see we closed right at it. Again, this is a chart where we can go and test the previous breakout area. We did that back here, which was a buy signal to either add or to get long, if you didn't get long, back in mid-April. Again, we're coming back to that level right now. We want to make sure we hold this level. For me, my guess is right now we're going to continue to go lower on GLD. We may get a bounce here, but there's a lot of overhead supply here where I think the sellers are going to step in and take it down even beyond this 142 level. So for that reason, until we see something differently, we will continue to hedge our gold position with the DZZ short. If we break the 142, 140 level, we will let go of GLD and let the DZZ run, very similar to what we did in silver. I don't think it's going to work out quite like silver because silver really took a multi-year drop in just a matter of 2, 3, 4 days. But we are still short silver now. We exited, as you guys probably follow us, between 40 and 41 on silver. So we still have a position in the ZSL. We sold half of it today at the open. I put the orders in the account last night. So we sold some at the open today at 23.92. We closed at 23.11. We're going to put our stop pretty far back here, as I had mentioned in yesterday's post, at around 17.59 in this area here. We're going to give it some room to fill this gap. All right. But again, metals, the overall trend right now, especially on silver, is obviously down. Gold is kind of down to neutral, but there's a lot of overhead supply. In ending, I would say anything that breaks the 50-day moving average along with support, I would get out of it. You'll see more next week on the blog. Thanks for listening to the radio show. Checking in on the blog. This is Doug McKay on the 6th of May, 2011, antiwallstreetguy.com. We'll see you next week.